Hey everyone, Tony here, presenting Apple today. This is only my third or fourth video, so hopefully these get better and better. Let's hope. Um, so we have Apple here on the monthly. What I'm going to try to show you is the macro view. So the monthly, the weekly, maybe the daily. And just to give you kind of like an idea of where Apple is, where it tests, where it might go, if there's a likely stop, if it's going to roll over. So let's see. On the monthly, you can see that I have the purple here. That's a 200 EMA. I have the red. That's the 50 EMA. And this particular chart, I think Apple really shines on the monthly. It gives you a really good entry on support of the 50 EMA. So we have here, and this is going back as far as 2003. So crosses over the 50 EMA, bounces to support, and basically if that was your entry, I mean, you're good for years. I mean, years and years. Has a little bit of a rollback, nothing too crazy here. Even if you sold here, I mean, the gains that you had, I mean, you went from $1. This is so crazy. From $1 in 2003 to a peak of 29, rolls over. Let's say you sold at the very bottom here for $11. That's a $10 profit per share in, what is that, 5 years? And then once again, waited a couple months, goes over the 50 MA. Let's say you bought there, you're buying at $15, let's say, goes all the way up, doesn't touch, really. I mean, if you wanted to be aggressive, you could have sold there, but you really could have just kept holding and you'd be in from $15 up to now. If you wanted to reload, you can actually just buy on the touch of the 50 and keep going, touch of the 50, keep going, touch of the 50. So you're buying all these dips all the way down to the 50, and Apple seems to just bounce off of that 50 EMA. So I love the monthly on Apple for just that reason alone. It hasn't touched the 200 EMA since back in, yeah, same 2003. So it's unlikely for it to hit that anytime soon, but you never know. Worst case scenario, what you could do is sell if you're really scared, I guess, or nervous about the stock rolling over. You could protect yourself and just sell partial on one or two closes below the 50 EMA. If you want to do that, and if it goes back up, just buy in at that point. Um, Wanted to clarify, this is not financial advice. This is just statistical, technical analysis, just looking at something very, very basic. So let's zoom in just a little bit so it's not such a crazy 20-year period. So let's draw a couple, let's draw a trend line that maybe goes from this low here up to there. So that trend line holds true. It hasn't even tested it since 2016. If we look at the retraces, so let's draw a Fibonacci from this low here to that little peak there. Let's draw some basic fibs levels. So in this particular case, from 2009 January to September 2012, we had a peak there. You can see that the RSI is overbought. It did a slight divergence there. So these two things, and the stochastic rolling over, basically, it rolls over a little bit after the fact, but it's in the overbought region. RSI is in the overbought region. It's giving you divergence. It's a good sign. If you're a trader and you wanted to sell a position to kind of protect yourself, not a bad spot to choose to do so. It gives you the chance to rebuy back at the touch of 382. In this case, it went back down to the 50, which is not really a Fibonacci level, but it's a very common retrace point. So the bulls bought back, protected, and just kept going higher. So we can see here that didn't even go to the 618, which is a very common area for support. And now let's see this as an extension, see where it hit. So this hit the 272, 1.272. Let's try this with something else. This is another way to do the extensions. No, it didn't quite hit there, but still interesting nonetheless. So we have this retest of the 50 EMA, which coincides with the 50% on the Fibonacci level. So that's a good, typically that's a good point for a buyback. And it also dipped at that point. It dipped just below the 50 on the RSI, and it was actually in the oversold region in stochastic. So on the monthly, that's a very good entry point. So let's see this little, actually let's see this little dip here. This one went down to the 50, no, the 382 and bounced back up. We can see that it once again respects not only the 50 EMA, but the 50 on the Fibonacci. So that's interesting. Let's go to this high here. Put this low here. Let's see what this range gave us. Touched down to 618, which again touches a 50 EMA. So you have confluence on quite a few levels there. It rolls over at this point where RSI had hit, well, in traditional RSI levels, it really has been overbought since this point here. I have my levels on the RSI at 80 because I like to be just a little more aggressive, I guess you can say. But it's traditionally been oversold since this point. So that gave you a heads up that it was in oversold region. Stochastic is oversold. It was basically rolling over just at that point. So that would have been a perfect point to sell your trade there if you wanted to do so. Rolls back down to the 618, perfect spot for a reload. Buy back your shares, just or buy more. And it's been going ever since. So at this point, we'd want to do an extension to see where we're likely to head to before a retrace. So on extensions, you're looking at a 1.272, a 1.618. Those are typically levels that you want to see a pullback at. And sure enough, we're actually just a little bit above the 1.618. That's traditionally where you're going to see a rollback. Doesn't guarantee anything, but you can see that we're at stochastic overbought, sorry. It's not quite rolling over, but it's basically there. Doesn't mean much because you can see the stochastic can actually continue being in the overbought region for quite a while, and it can actually roll. But usually once it crosses in my case, the 80, that's usually what I like to see. For it to roll over there and also to be below that region. RSI is traditional overbought regions. I would not be buying here at all. I would be waiting for a pullback. So let's pull a Fibonacci. Let's assume that this is going to be the high here. And we bring up a fib. So I'm going to see, I think a healthy pullback would be down to the 382. But remember again, the 50 EMA has been a historical support. So right now it's at the 786. We haven't seen it roll back all the way down to 786 since I guess it's the 618 that happened. I think it was not too long ago. As price keeps going up, it could just keep going. As the months pass by, that 50 EMA is going to keep curling up, and it might hit the 618. But at that point, it might be a little bit higher as well. But it's looking like it might be the 618 is what really gets me trigger happy to sell if I had some shares of Apple, which I don't, by the way. So a little bit of a warning. At the end of the day, I would not be buying at this region. It's just a little too dangerous for my taste. So that's the monthly. Let's see how the weekly looks. So we're looking at and by the way, I just noticed that the transparency on my face, I'm looking very ghosty, so apologies for that. It's It's a work in progress, guys, so work with me here. So let's go back a little bit, see what we're looking at here. So we had this, let's see here, this major, this goes back to 2016 up until 2018. And you can see that it actually passes 618 in this case, touches the 200 EMA, and then just bounces off that 200 EMA, which, let's see if it historically respects 200, and sure enough, we have touches going back as far as 2013. So on the weekly, you could definitely see that the 200 EMA is a great support. Here it broke past, became resistance, broke through, and ever since it's been support. So support since 2009 at the 200 EMA on a weekly. So we have a touch here, touch, touch, another touch over here. So it's looking, again, it's looking, this uptrend is a never-ending uptrend. Let's bring this back a little bit further, see how we go. So we're still, so this, yeah, this Fibonacci range, you can see that it came back, touched the 618, bounced off of that, coincided with that 200 EMA on the weekly. And let's see if we actually draw an extension off of that same level. We can see that, once again, we're at the 1.618 extension level, which is a very, very common short zone, profit-taking region for most traders. So I'd be cautious, but it's hard to go against Apple. I would not be buying at the end of the day. I would be doing the same thing I've been saying before, which is I would like to see a pullback. Now let's see what would be a decent pullback range here. Let's try this. Let's see. We could be looking at a pullback to the 382, the 50% region. So you're looking at somewhere between 268 and 250. 250 sounds like a good, solid round number for me. 50 MA is going up to that region. Seems to be a likely situation there. I would not be buying again. I would be waiting for that pullback, especially once again with this 1.618 extension here being hit this week. So let's look at the daily. Oops. Let's look at the 1 day. Okie dokie. So we have, let's draw a couple of little things here. Let me try to draw this array. So this array has been respected quite a few times. We have another low here. If we wanted to keep this one as a low, so that seems more reasonable. So you can see that this particular trend line array, oops, that was a little bit too high there. It seems to be respecting that uptrend. I would be worried if this falls below this trend line. And then at that point, I would want to see if it bounces off the 50 EMA on the daily, see how strong that trend is. If not, then a pullback down to the 200. So let's see where we are. Let's go back a little bit. So we have this. This is a pretty, let's see here. That 200 EMA looks like a sweet spot, to be honest with you, for a retrace. The 61.8 at 245, that could be a good rollover point. Now, granted, by the time it gets there, it's going to take a couple of days. Maybe this 200 hits to 50%. That seems like a very good, logical spot. Now, let's go and draw some extensions to see if these levels coincide. So we're going to try to draw. Let's draw from here to here. Draw an extension. It didn't quite hit this 2.618, but that's a major extension there. Let's go to this recent little range, see what happened there. Yeah, so we're a little overextended here in my point of view. We can actually add a level and see if it's hit. So we're at the 2, looking at the 3414. Actually, 3414. So the 3 was basically hit. There could be some more upside. I would look for a 3.618 if it decides to just shoot up like crazy. The 3.618 would be 355, which is not out of the realm of possibilities. So now on the daily, we have RSI that's it's rolled over already. So we have some divergence there. I'm not sure if we're going to be able to. Well, again, with Apple, you never know. It could just keep going. I realistically see a small pullback, likely between 382 and the 618, somewhere there. The sweet spot seems to be that 260 right now, especially by the amount of days it would take to probably get to that region. 260 seems like a solid target for a healthy bullish pullback. It doesn't mean that it's going to be some sort of a bearish death cross or something like that. But let's see if maybe it'll respect this particular trend line here. We have this low and this low. Makes sense because by the time this would hit would be, let's see here, May 2020. So around May 2020 is a, well, again, I don't like to give target dates because you just never know. So there's no way I can accurately predict anything, really, and nobody can. So no matter who has studied, I don't care if they're Jesse Livermore or whatever, you know, even Gann himself, might give you a very good idea of what may happen, but no, there are no guarantees. But this looks like a very likely scenario, a healthy pullback to the 260 region. Again, it's so not overbought, but it's just the price has just gone parabolic for so long that I wouldn't be a buyer here. I will wait for a pullback, and that's basically, I think that's the logical region there. Now, if we do a horizontal, let's try to see if this horizontal here. Let's take away this, or just make it fade a bit. So this horizontal here, we have 1 touch, 2 touch, 3, 2. I'm sure this goes back further. But that could be a decent horizontal to kind of guide yourself by. So if it breaks past this point, I would be not permanently bearish, but I would be a bit concerned because at that point we're rolling over. As long as we're above this horizontal, above this trend line, and we have a healthy bounce at the perhaps a 200 on the 50 of this fib, so everything pointing towards that 260 region, acting as ultimate support, I think that we're going to keep seeing Apple keep going up. Again, this is technical analysis. Any kind of fundamental news, any kind of earnings report, any craziness with war, coronavirus, any kind of craziness in the news can trump any kind of technical analysis, no matter how great the person, no matter how solid everything looks. It's just, that's the reality of the markets. So technical analysis just gives you statistical probabilities and that good stuff. But at the end of the day, it doesn't really 100% guarantee anything. Nothing does. But it's a fun exercise. I thought I'd share that. Apple's always fun. I love their products. It's a fun stock to watch. I'm sure everybody, you can see how the price has acted and it just keeps acting, and it's just a fun, stock. So hopefully you guys enjoyed this. If you guys have any questions, any concerns, any requests, please let me know. Like the video if you like this. If there's anything that I can improve on, I'm sure there's tons. Let me know. Give me some feedback. Like it. Like the video. Subscribe if you can. And hope to hear from you guys. Thank you so much. Bye-bye.